Welcome to the HC Commodities Podcast, a podcast dedicated to the commodities sector and the people within it. I'm your host, Paul Chapman. This podcast is produced by HC Group, a global search firm dedicated to the commodities sector. Welcome to the 200th episode of the HC Insider Podcast, renamed the HC Commodities Podcast. More on that in a moment. From the very outset, I want to say thanks. Thanks to you for listening. A huge thank you to all of our guests for graciously giving their time and insight. Thank you to all those who've taken the time to give us a review on either Apple Podcasts or Spotify or wherever you listen. That's been really crucial to the show's growth. And finally, thanks to my colleagues at HC Group for the many connections and great support they've given us throughout our 4 years of recording. So firstly, the name change. The HC Insider Podcast is a little bit esoteric to those people who only know HC Group and know our content feed HC Insider and doesn't exactly say what it does on the tin. Despite that, the podcast is regularly in most of the major charts around the world in business and management, especially in those regions where commodities are crucial to the economy. And in fact, we're in the top 3,000 of all podcasts listened to globally, which is a fantastic achievement and a testament to the insight our guests bring. The name change is simply to make it a little bit clearer what this podcast is about and support people finding it on the web and so forth, and hopefully allow us to continue to grow and therefore continue to get great guests on the show to talk about the energy, ags and metals markets, the trends and topics within it, and the talent impacts. The podcast started 4 years ago, almost to the day, during the height of COVID, when my firm, HC Group, which is ultimately in the business of putting people in the same room to interview for positions in the commodities sector, felt pretty perilous. Yet there was so much going on in the commodities sector and so much change that I felt we had some unique connections around the world who could bring those stories out. And also, coupled with my love of podcasts, well, we decided to launch one. Although at the time, I admit, I guess we thought that it would run for only a few episodes and certainly didn't expect it to hit 200. And I want to give a special thanks to our very early guests, Jim Fallon, John Massey, Doug Pratt, for really leaning in and supporting us in those early days. But I think what has emerged is a substantial body of work that has highlighted how interconnected the commodities markets are, especially in the world of energy transition, deglobalization, and digitization. And I think it's that hunger from all sides of the sector to understand what's going on in other verticals, how they're planning and tackling the challenges and capturing opportunity that has led to the performance and interest that the podcast has seen. And to that point, that's really what this 200th episode is about, is just exploring the catalogue a little bit to highlight that actually much of it remains extremely relevant to today, and just to give some sense of the span of the conversations that we've had over those 200 episodes. And looking back, it's fascinating how much change there has been in the sector. We started in the middle of COVID when there was so much uncertainty, not just about markets, but also our own personal lives and our roles. Then Russia's invasion of Ukraine and the turmoil that's created in global trade and the energy crisis. Also, the rise of ESG and its subsequent arguable fall from grace, which we've covered in detail. The major theme of the energy transition, which is still absolutely fascinating, not least in the variability and different point of views on the technologies that are going to be deployed, the mechanisms about how to get there, the interaction between markets and government policy, as well as the actual outcomes and whether it's achievable or not. We've also covered the ramifications, with numerous environmental scientists talking about the climate impact and what it means for the market and for our own personal lives. We've also tracked the commodity supercycle that didn't really happen yet, and the impact of interest rates on the commodities sector and more broadly, as well as a number of book reviews tracking some of the most recent thinking and output on the commodities sector. And again, for each of those, it's so fascinating, the journey that I've been on, and I hope you've been on with me, on understanding the more nuanced aspects of all of these trends. And I think for the most part for me as well, the rising feeling that the commodities sector needs to do a better job of advocating for itself and how crucial it is to the world's economy in every aspect. and how if you want to affect the energy transition, this is the place to do it. It's also a fascinating subject in itself. Trading is largely misunderstood, or people aren't aware of it, whether that's in government, in society more broadly. And I think trying to provide some insight into what it is commodity traders do and the roles and talent required is highlighting the opportunities in this sector for individuals. And in fact, I do get a number of notes each week from people expressing their thanks and saying how interested they are to either get in the sector or they've now started in it from university, and the podcast has been a big part of that, which I'm immensely proud of. One of the key areas I particularly enjoy are book reviews. We've had over 40 book reviews on the podcast, mostly to do with commodities, and some of those have been launched on the day of publication. We've had authors such as Daniel Yergin, famous investigative reporting such as Chris Miller on chip war, Zeke Fox on number go up on the crypto space, which is a recent one I particularly enjoy. And actually it's to the point where we're getting sent advanced copies of books, which is certainly filling up my library and a great joy. The first of those book reviews was The World for Sale with Javier Blas and Jack Farchi, which, though it raised some eyebrows among the community, certainly brought the story of commodity trading to a much broader audience.
In 1998, Vitol, the world's largest oil trader, made $24 million. That's $24 million. In 2009, Vitol made almost $3 billion. We went in the space of little more than a decade from 24 million to 2.3 billion. And that's how much the industry changed in just, 10, 12 years.
The other suite of podcasts that really stand the test of time are our, what I call the 101s, the deep dive into a particular product, understanding its supply chain and how it's being affected and impacted by those key trends that we highlight throughout. We've covered all manner of critical minerals and metals, and we've covered many of the new products that have arisen from the energy transition, doing 101s on the likes of renewable diesel, sustainable aviation fuel, green ammonia, and all of them still remain relevant. And I think there's also a story there about my own learning and journey that I've gone on some of these products, in particular hydrogen. My first episode on hydrogen was very much the Swiss Army knife. This is amazing. It's going to change the world. And over the course of episodes we've done it, we've certainly developed a more nuanced view about where and perhaps where it shouldn't be involved. That being said, like all things on the podcast, I do really strive for balance and trying to understand both sides of the story so that listeners can make their mind up or live with the question. On that hydrogen journey, one of our seminal episodes early on was with Paul Martin called Hydrogen, Hope, Hype and Thermodynamics.
For the fossil fuel industry, hydrogen is a no-lose bet. It's win-win. It either delays electrification, and by so doing, because the oil and gas companies don't supply electricity, the oil and gas companies win as a result of that delay. Or they get dragged into the future of energy supply in a decarbonized future by virtue of massive amounts of government subsidy for the production of hydrogen from their fossil assets, and they win. Problem with hydrogen is that it is neither efficient nor effective. Okay? So right now, today, we trade efficiency for effectiveness with great willingness. As an example, we burn gasoline in cars. And that is the triumph of effectiveness over efficiency, because the engine is terrible. It's inefficient. It's around 25% efficiency, closer to 20% if you look from source to wheels. And that's terrible. I mean, that's really awful. But it's so effective that it's worth it. Hydrogen's problem is that it isn't effective. It's a high energy density per unit mass fuel, but its energy density per unit volume is so terrible that it's very difficult to store, to distribute, and to use as a fuel in anything like a vehicle. And it's even difficult to use in a conventional gas distribution system for reasons associated with the nature of the hydrogen molecule. And those things add up to hydrogen being basically a really bad idea as a fuel.
Another key theme that we've covered in many episodes that again still stand the test of time are geopolitics. Of course, during this period of recording the podcast over the last 4 years, we've had invasions, geopolitical tensions ramp up, and much of it centered on critical metals and energy. A reminder of how central this sector is to the world economy and the relationships within it. We've covered elections and commodity impacts. We've covered sanctions and geopolitics. But of course, the master on this subject has been Daniel Yergin, who we've had on twice.
Well, I think energy is so intermixed with Russia and Ukraine and Europe. Sometimes you don't know why you do something when you're writing a book. Just there's an instinct. And why did I focus so much on Russia-Ukrainian relationship and what it meant for Europe? And I had a line in the book saying that, that the issue that was going to blow up between the United States and Russia was Ukraine. I didn't envision in this horrible, barbaric way that would happen. We see what this been happening to civilians in cities, but you could just see it, and you could see Putin's obsession with litigating against. He wanted to relitigate the end of the Cold War. He consistently said Ukraine is not a separate country. He said it never existed as a country. 2/3 of it belonged to Russia, and 1/3 to the Russian Empire, and 1/3 to Poland, Austria, and so forth. So this has been his obsession, and always objecting to the way the Cold War ended. But I did kind of marvel at it, because among his many grievances was the end of the Cold War, the collapse of the Soviet Union. Remember, he said it was the worst geopolitical,
a national tragedy.
Yeah, and so forth. And yet, let me ask you, who did better out of the end of the Soviet Union? No one did better than Vladimir Putin. If it had not been for the end of the Soviet Union, he might today be a retired, mid-level former KGB officer living on a pension in what would still be Leningrad. I mean, he did really well out of this, but he wanted to reassert Russia as a great power. 22 years in power. He's now on his 5th American president. He's seen U.S. presidents come and go. And I think what happens when you're in power that long, megalomania sets in. You don't have people around you any longer who knew you back when, who can actually say to you, kind of, you're going off the track here, or do you want to think about this? And I think that his economic people, the people who were running the economy, the central bank, in the private sector, but who had been in his circle, who had been with him in St. Petersburg, apparently they were not part of the decision making. And for them, this is kind of end of the road for them. They're no longer going to be international figures. They've been sanctioned, and they're going to have to deal with an economy that's really malfunctioning now. So I think that the battle with Ukraine, battles over natural gas, which kind of were emblematic of the conflict between the two, and Putin's belief that, I've been here 22 years, Russia's a great power and Ukraine should not exist and should be part of Russia.
The other area that has been a constant trend podcast that we've been tracking throughout the series so far has been the coming commodities supercycle, where theorists posit that a lack of investment over the last 15 years in traditional energies, coupled with the rising demand of things like power in the wake of 5G and AI, another topic we've covered multiple times, as well as, of course, a huge demand for many of the metals that are key to the energy transition, such as copper, lithium, etc. Yet as yet, prices, whilst rising steeply in 21 and 22, have come back down more to normal. One of the key proponents of the theory, but also giving us insight into what's going on in the market, is Jeff Curry, who's always an absolute joy to have on.
Well, Paul, you're being kind to us. No, it's been a rough last 3 months. I think markets are down something like 30%. No, we weren't looking. Our IQ dropped pretty precipitously. But I look at this. I've been doing this 26%, and I got hit by something I should have known better. And let me try to explain to you why I should have known better. When you look, let's take the definition of inflation. The definition of inflation is too much money chasing too few goods. So it has two conditions: too much money and too few goods. And when we think about the condition of the too few goods, that's low inventories and commodities, the too few goods condition has gotten tighter. That's why we held on. We're going, wait, fundamentals are getting tighter. So you don't want to be short these markets. But what happened to the too much money condition? It turned into, if it's too much money chasing too few goods, it was fewer dollars chasing fewer goods. And the fewer dollar condition, the money supply is shrinking faster than the fundamentals were getting tighter. And so what that did is it dragged down the price in the face of tightening fundamentals. Somebody said, money supply, I hear you. Is it contract? It's not contracting, is it? Yeah, it's really contracting when you think about everything denominated in dollars. You take all the G7 countries, you take their M2, and you convert it all into dollars. The amount of G7 M2 is contracting at an exorbitantly fast rate, given the strength in the dollar. And since these are global markets, that global supply of dollars is really what matters. So I think if you get my point, you got to separate the macro story from the micro story. So when can the micro story beat the macro story? You need the central bankers to probably, not only slow down, but potentially pause.
And it was that key insight from Jeff and our discussion on Edward Chancellor, the financial historian, that triggered a series of episodes doing a real deep dive into the impact of rising interest rates on the commodities sector, but also a look back on their role historically when they were extremely low. Edward Chancellor predicted grave outcomes of rising interest rates, and indeed, shortly after we recorded our episode, we had the events around Silicon Valley Bank and Credit Suisse. And his expectation is that this is going to be a smouldering story going into the long term, and we're not done with it yet, as inflation appears more structural and interest rates stay higher for longer.
I think there's a growing consensus that interest rates were too low in the last decade, and that contributed to asset price bubbles and the build-up of debt. So I don't think, we'll be shocking anyone by making that comment. The question then is, can you normalize rates under those conditions? And my hunch would be to say probably not, because if you've got very high debt levels and very inflated asset prices, as you start to normalize interest rates, you bring down the asset prices, which, obviously we saw last year with broad stock and bond indices being off, around 20% for the year. But you also then, raise debt servicing costs, and you take these, the zombie companies that we alluded to, and you put them in a difficult position. You take the companies that have been financial engineering and heavily leveraged, and they find it difficult to roll over their debt. So I think I'm afraid to say, and we'll see whether this thesis is borne out over the course of next year or so, is that you can't really normalize rates without crashing both the economy and the financial system. So I'm afraid the sort of the bearish thrust of my book was that, the low interest rates have put one into a position of the economy and the financial system into a position of disequilibrium that was difficult to get out of, or, to use a sort of phrase that you used here a bit of, the day of reckoning, finally arrives.
The energy and resources sector is experiencing unprecedented change. To help companies navigate this world and capture its opportunities, HC Group launched Enco Insights in 2023. Enco has rapidly become the leading global expert network dedicated to energy and resources. Enco Insights leverages HC Group's 20 years of connections and dedication to the sector to give clients the expertise they need to take decisions fast. Connect with Enco's experts for anything from a 1-hour insight call to a longer-term consulting project at encoinsights.com.
Another key theme of the podcast is, of course, the energy transition, which really sits at the centre of driving change for the sector more broadly, and introduces so much uncertainty whether that's from policy, from markets, from technology. And at the risk periodically of upsetting some of my favourite collaborators, such as Laurent Saglan of the Redefining Energy podcast, which I recommend listeners to, we are trying to cover both sides because there's so much uncertainty in how the energy transition plays out and the timelines of it in a world of scarce resources, high cost of capital, and competing geopolitical interests. One of those guests who brought a very different perspective, questioning whether the renewable technologies are really the solution, was Adam Rosenzweig. And I think it does highlight our attempt to try and go beyond the headlines and really understand the detail, which is why, in part, the podcast is 45 minutes long, and I resist every attempt of my colleagues and friends to make it shorter. I don't think you can get in detail into a subject in a short amount of time, and I think what is missing in much of the broader media coverage of the energy transition is actually these deeper dives into trying to understand the nuances and get people on the same page about what is actually effective and what is workable.
And basically, for a new energy technology to really take hold, it has to be more efficient than what it's replacing. We've never really had an instance of a prime mover or an energy source come and take over if its energy return on energy investment is substantially or even a little bit worse, or in fact, even not much better. It has to be much better for it to really displace the incumbent technology. And we said, wow, that's really interesting. You can go back 2, 3, 4,000 years and see example after example. And now let's beg the question, well, what is renewable? What do renewables look like under that framework? And that's the real key, isn't it? And very few people have talked about that. And why have they not talked about it? Well, I think it's because we've had such a period of abundant energy. It really hasn't mattered. But the truth is that wind and solar and hydrogen, for that matter, we can talk about hydrogen in a second, have terrible energy return on investments. They have terrible EROIs compared to oil and compared to natural gas and compared to coal. And the reason, of course, is that they're really, really, really low density forms of energy. And so what you end up with, yes, you can produce energy from them. I mean, obviously we know that. However, when you look at a 4.5 megawatt windmill, then you figure at best it's going to do 29-30% utilization rate, and it's actually far lower than that. That'll do something on the order of magnitude of like 40 terajoules per year of energy. And I'm sorry, I'm bouncing between units here. That'll have a 20-year life, but it'll require about 50 terajoules at least to build. And so you're talking about what we call a gross EROI, meaning just for that windmill, of anywhere between, at the best, between 12 to 15 times. Compared to 30 times for oil and for natural gas. So already now you've cut your surplus by 60, 70%, something like that. But that doesn't really tell the whole story, because you then need to buffer these things because they're not suitable for base load power. And I think probably, your audience is a sophisticated audience. They understand that at this point. You could put 2, 3, 4, 5, 10%, even 20% if you really have a strong grid, renewables, but they have to be backed up by something for when the sun doesn't shine and the wind doesn't blow. And that something, as of right now, is batteries. And the batteries themselves are terribly energy intensive to both mine the materials that are required and to then manufacture the batteries.
And before you switch off, we've also covered key proponents of renewables, giving their case about the technology exists. However, it's about planning and permitting and overcoming incumbents to actually unlock the energy transition, such as Bill Nussey.
We hear from the IPCC that we have this decade to make the changes to really ward off the biggest consequences of greenhouse gas growth. And yet, in the US at least, we're talking about things like, well, we need to build more transmission. Well, guess what? The largest regional transmission operator in the U.S. just announced a 2-year hiatus, and they won't be approving any new projects till 2027. And a lot of people in the U.S., including the government, think nuclear is the answer. We can't even get a new pilot plant live by the end of the decade, let alone build out hundreds of plants. And why people are so focused on these things when we can just build solar everywhere immediately, starting tomorrow, yet there's not a single large-scale focus from any government or any really serious outspoken leaders on why we have a solution that's working remarkably well today. It's growing quickly, easy to do, and yet that's not a key central part of anybody's plan. That's the opportunity to address climate change more aggressively. And I think in this book I wrote, maybe one of the biggest business opportunities in history.
Which brings us nicely to another key area of coverage for the podcast, which has been on the critical metals space, particularly around battery metals. And we've covered questions such as which battery technologies will be the future and where are their applications and what does that mean for their supply chains. We've covered the political dimensions as well as deep dive into individual metals and products, as well as the environmental impact of essentially the West having outsourced their environmental impact to China, which has now essentially grabbed and controlled all of that supply chain to the point now where cheap EVs are landing on Western shores to much of the chagrin of politicians. And many of our guests on this subject have been deeply involved in raising awareness within Western governments, whether that's on the Capitol Hill, in Brussels, or in various individual parliaments around the world. Notably, of course, is Simon Moores of Benchmark Minerals, a great friend of the show. And here's Chris Berry, another.
The reason that we find ourselves in the position we find ourselves in today with respect to resource dependence has to do with globalization and this sort of outsourcing, if you will, of manufacturing bases to lower cost locations. Of course, I'm talking about China. I'm not some left-wing protester here. I'm simply offering an opinion on what got us to this point. So we in the West have chased the lowest cost of production for years, decades, if you will. And that's sort of one of the main reasons, again, at a very high level, why I think we find ourselves where we are today. It took us 40 years to get into this situation. And I'm not saying it's going to take us 40 years to get out, but there's no sort of easy overnight fix. So I think it is going to take some sort of a combination of both public and private sector incentives, if you will, to really try and right the ship.
I mentioned at the start my love of podcasts. And in fact, actually, part of my inspiration for this show, and this is going to sound a bit grandiose, was Melvin Bragg's In Our Time, who inspires me to ask simple questions, and in my case, not his, sometimes stupid questions, really to try and get to the heart of the matter. And I'm able to do that because obviously I'm just a recruiter in this space who just has a deep fascination for commodities, having spent my career recruiting within it. But that love of history sometimes allows me to go stray. Particularly, we've had a few Christmas episodes where we've taken facets of the commodities sector and look at it in a historical context. Some of those to do with individual commodities and some of those to do with bigger trends. One of my favourite was a Christmas episode from a couple of years ago where we looked at the fate of Rome with noted historian Karl Harper and how actually Rome's rise and fall closely tracks climate variation, with its golden period during a uniquely warm and stable period and its subsequent fall attached to cataclysmic events such as volcanoes and cooling and subsequent pandemics. Well worth a listen still, given the implications for our time.
Right. Well, the last centuries before the Common Era are the period when Rome goes from being a kind of first a city-state and then a kind of minor power on the Italian peninsula to be the dominant power across the Mediterranean. And it's really an exceptionally vast empire that stretches over 5 million kilometers squared. It covers 30 degrees of both latitude and longitude. And it's the only time the Mediterranean has been held by a unified empire. At its peak, it will have something like 60, 70, 75 million people, about 1 in every 4 human beings alive at the time, inside its territorial frontiers. And during the phase of the Roman Empire's expansion, of Rome's conquest, certainly this is a period of really significant population growth. We also believe that this is a time of relative climate stability. So even the climate scientists who don't sort of come at the question from the historical side call this period the Roman warm period or the Roman climate optimum. There's not a ton of agreement over exactly what that means or exactly when it was, but sort of broadly, the last few centuries before the Common Era into the first, second century of the Common Era, the climate is warm relative to Holocene levels. It is apparently generally humid, so relatively high precipitation in the semi-arid Mediterranean, and it is above all relatively stable. So there are fewer sort of episodes of extreme climate anomalies in any direction for really a fairly long period of several centuries.
The sort of the narrative, at least the popular understanding, is then Marcus Aurelius, instead of living up to his high ideals and his meditations, passes the torch to Commodus, his son, who's a terrible emperor, and everything starts falling apart. You get barbarian invasions, etc., etc. Actually, obviously, there had been far worse emperors than Commodus prior to that, the likes of Caligula. Nero wasn't very good. The book really talks about this period as sort of the first real shock to the empire, coming just before, in Marcus Aurelius' reign alongside Antoninus Pius. We don't know quite what it is, but there's a pandemic. It's called the Antonine Plague. Let's start there.
Well, let's go back to the movie Gladiator and recognize that that's a heck of a good movie. And
heck of a good movie. Love it. Love it.
To complain. Russell Crowe is great. So, of course, we as historians are constantly going to ask what causes historical change. And there's always various factors at play. And human factors are a big part of it. And you can have good emperors, you can have bad emperors, and that clearly matters. You can have barbarian invasions that fail, that succeed, that clearly matters. But I think we're learning that those human factors are part of a matrix that needs to include as well environmental factors, both the climate system that affects, for instance, agriculture, but also that affects infectious disease.
And in a time of change and the forecasted decline of fossil fuels, it's also instructive to look at historical commodities and their rise and fall. One notable episode was Hayne Park's coal episode that led us to whale oil. And here, noted historian Stephen J. Dolan talks about his book, Leviathan, and the history of whale oil.
I mean, on the eve of the American Revolution, there were over 300 American whale ships, and they were bringing in a huge amount of blubber, oil, and baleen. And in fact, more than 50% of the trade between New England and the mother country was revolved around whaling related products. And although many people in Massachusetts like to point to cod being the king because cod fishing was very important at the time, actually whaling on the eve of the American Revolution brought in more money than cod fishing.
And finally, one notable enjoyable outcome of the HC Insider podcast, now the HC Commodities podcast, has been our live events that we've started doing. These started back in May last year, where Brown Brothers Harriman sponsored an event to talk about the impact of interest rates on commodities, and we've already done another 5 since. These events are in person only, with audiences from the sector of somewhere around 150 to 200 people, followed by cocktails and networking, and have been a phenomenal experience, and I look forward to doing more of those. We'll always put the invites in show notes as they come up, so please do look out for them. It's really great meeting people who follow the show and enjoy what we're doing. Well, looking towards the future, I hope we continue for another 200 episodes or so. As much as I think we've covered, there's so much more to cover, and that's discounting what are likely to be more events. Events, dear boy, events. And that is a key driver of the commodities sector, and we'll be on hand to cover them. So once again, thank you so much for listening to the show. Please do support us by sharing it with your colleagues, writing us a review on the platform you're listening on. And of course, if you or your company have needs within talent that must have or bring a specialization in commodities, please do reach out. That is our day-to-day job, and that's where we're the experts. And finally, I hope you enjoyed the episode. Thank you for listening. To find out more about HC Group, our global offices, and our expertise in search within the commodities sector, please visit www.hcgroup.global.